Now let's talk about Italy, because factories and offices across the country will close on Friday. That's due to strike action by the country's three biggest trade unions. Workers are protesting against pension reforms which were introduced by the government at the end of last year. And Italy's largest union, the CGIL, is also opposed to plans to make it easier to hire and fire workers. Now, in the meantime, Italy's borrowing costs have risen sharply this week. That's a sign that international investors are distrusting Italy's commitment to push through tough measures. Well, Luca Bernardinetti is a professor at the European School of Economics in Rome. He also works in private wealth management at Deutsche Bank Group, and he joins me now from Italy's capital. Thank you for joining us today. Let's talk about the government's options here in terms of the union protests. Can it really afford to make any changes to those labour reforms, those pension reforms?
Well, the proposed labour reforms, including changes that will make it easier for companies to fire workers, have already prompted the CGIL union to call a general strike today involving both public and private sector workers. Monti has pledged to push through far-reaching reforms of the Eurozone's third largest economy before new elections in 2013. His effort to kickstart growth needed to reduce Italy's debt mountain are being closely watched by financial markets and by our Eurozone partner, who could not afford to bail out Italy if it lost access to international markets. Today's rally is being called to protest against pension reforms, which have been already passed, and the unions still did not decide a common line on labor reform issue. But Camuso, the CGIL Secretary General, said that there was a deep discontent over the proposals. Camuso said that Italy is living in fear, and today's strike is against changes to the Article 18 of Workers' Statute, which would be leading to easy firing, according to them. However, unions would essentially agree with the reform if Parliament comes up with a solution that includes reinstatement as a deterrent for all motivations used to fire workers.
Let me just interrupt you very briefly and ask you about the bond yields, which, as I mentioned, have been rising. How much of a concern is this now for the government?
Actually, yes, Sarah. It's a big problem as Italian stocks plunged on Tuesday after a report in Business Daily, Il Sole 24 Ore, that the government is set to slash 2012 growth forecast but leaves its deficit estimate unaltered. The government's last forecast in December said that GDP would contract by 0.4% in 2012, while the report said the new figure would predict a shrinkage between 1.3% and 1.5%. The bond yield, well, the reason for rising bond yield is simple. If investors see higher risk associated with investing in a country's bonds, they will require a higher return to compensate them for that risk.
Thank you very much indeed, Luca Bernardinetti. Thank you for joining us, and my apologies for interrupting you there.
My pleasure. Thank you.
Now let's